So you look at a portfolio of buildings. You see steel, glass, concrete, solid, tangible assets, right? But what if I told you the biggest risks aren't in the bricks and mortar at all? What if they're in the invisible threads connecting every single one of them? Today, we're going to pull back the curtain on the hidden dangers in commercial real estate. We've all heard this 1,000 times. It's investing 101. Don't put all your eggs in one basket. It's the foundation of, well, pretty much all modern investing theory. Seems simple enough and effective, right? Or is it? Because when you're talking about massive, big-ticket real estate deals, that simple piece of advice can be, well, dangerously misleading. What happens if all those different baskets you've got are secretly holding hands, getting ready to jump off a cliff at the exact same time? All right, so let's start with the basics. We'll call these the risks you can actually see and touch. These are the property-specific issues that, most savvy investors are already thinking about when they start building out a portfolio. And on the surface, this makes perfect sense. You buy an office building, your big worry is the rise of remote work. You invest in a shopping center, and you're keeping an eye on e-commerce. Each property type has its own well-known villain. It feels like you've built a series of separate fortresses, and each one is prepared for its own specific battle. And then you add another layer, geography. You spread your properties across different states, different cities, thinking you've built yet another safety net. But of course, every location comes with its own baggage. Could be local politics, could be hurricane season. So now you've diversified by asset and by location. You're feeling pretty safe. But here's the thing. This is only level 1 of the game. And this is where we pull back the curtain. Because beyond the physical buildings themselves are these invisible financial structures that are holding everything together. Or when a crisis hits, they're the very things that can make it all fall apart. This is where the real danger is hiding. So what's the secret ingredient in almost every single major real estate deal? Leverage. Debt is the absolute engine of commercial real estate. In the good times, it can supercharge your profits. But in the bad times, it can amplify your losses into total oblivion. But more importantly, it's the first invisible thread that ties your entire portfolio together with a single shared vulnerability. And that brings us to this really terrifying concept called correlation risk. It's the investor's nightmare scenario. It's when all your carefully separated assets, your office tower in Texas, your apartment complex in Florida, suddenly decide to link arms and start moving in the exact same direction, usually straight down and always at the worst possible moment. So how does this actually happen? Well, this is a perfect illustration. It almost never starts with one of your buildings having a problem. It starts with something bigger, like a credit market freeze. Think back to 2008. All of a sudden, it doesn't matter how great your tenants are, it doesn't matter how amazing your location is. If you can't refinance your debt, you are in big trouble. And since every property in your portfolio has debt, the entire portfolio is facing the exact same crisis at the exact same time. Poof, your diversification just vanished into thin air. And get this, it's not just about having debt. It's about what kind of debt you have. If you have fixed rate debt, you're basically playing a game of chicken with a calendar. Just praying your loans don't all come due for refinancing when interest rates are sky high. And if you have floating rate debt, well, you're on a roller coaster. And every single rate hike from the central bank squeezes the cash flow from all your properties, all at once. Okay, let's peel back our final layer of hidden risk. And this is one that gets completely overlooked all the time. The sheer grinding, day-to-day difficulty of actually running a diverse portfolio. I mean, this is the unglamorous, behind-the-scenes chaos. As your portfolio gets bigger, the complexity just explodes. You're juggling totally different business models, you've got multiple management companies, and none of your tech systems are talking to each other. This creates a systemic weakness that you'll never see on a balance sheet, but trust me, it can absolutely cripple a portfolio when things get stressful. It's basically death by 1,000 paper cuts. So, just to recap, we have the visible risks with the properties, we have that invisible financial web, and we have the silent operational threats. Now let's talk about what happens when they all collide in a real market downturn. This right here, this is the key takeaway for this whole explainer. When the market is calm and everything's going up, you feel like a genius. Your office building, your retail center, your industrial park, they all feel like they're on different planets. But when the storm hits, all those hidden connections, the debt, the credit markets, the operational strains, they all pull tight. And you suddenly realize you've been flying one big interconnected kite the entire time. So what's the answer? What do you actually do about this? Well, It's not just about buying different buildings in different places anymore. It's about proactively managing these hidden system-wide risks. It means staggering your debt so it doesn't all hit a wall at once. It means holding way more cash than you think you need to survive a credit freeze. And it means constantly stress testing your entire portfolio for that one moment when you know diversification is going to fail you. And really, it leaves us with this massive question for any investor today. In a world where everything is so deeply connected, maybe real safety isn't about owning separate things anymore. Maybe it's about deeply understanding the systems that tie them all together. What does safe even mean when a storm on the other side of the world can sink your ship right here at home? Definitely something to think about.